largely lower barring Nikkei, which is at a 33-year high.
Heavy Industries Ministry is now looking at this proposal. They are holding industry consultations.
On the Nifty and especially on the Bank Nifty, starting to look a little weakish. Are we entering a bit of a corrective phase?
Moody's has gone ahead and downgraded Vedanta Resources.
This time around, it'll be very interesting because new sectors will get fair bit of attention.
The Nifty Bank is down 130 points, and that one is taking a harder knock in today's trading session.
By and large, I think the uptrend is still has been maintained.
Production is now at its epitome. All the companies have increased their production. The demand is also good.
The 2-year is going to pretty much react to how data flows in and how the Fed is going to admit to what kind of rate cuts.
Reliance will contribute to making Gujarat a global leader in green growth.
Marginally lower for the benchmark indices at 11 o'clock.
SEBI has kept Manappuram Finance and Ashirwad Microfinance IPO in abeyance.
इस अमृत काल में ये पहली वाइब्रेंट गुजरात ग्लोबल समिट हो रही है.
The SEC stating that Bitcoin ETFs had widely been approved.
Did slid below the 21,500 mark, the Nifty that is, and has recovered from those levels.
Hello and welcome. That was the day so far. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. We're the Closing Bell team. I'm Reema Tendulkar. With me, Surbhi and Nigel. Quiet, guys. All eyes on tomorrow. I think today could have been an off, like a trading holiday, given the price action, at least from the index.
It could have been an off. Any day can be an off, Reema, coming out of that holiday. But, if you just pull up the chart on the Nifty, in today, you'll see there's a little bit of green as well as a little bit of red. And that's what we have in the studio as well.
That's what the ladies decided.
A little bit of red. Just take a look at that. A little green, little red. Now let's get a full frame, and you'll see Reema and Surbhi as well spreading it out there. But it seems we're in this range. 21,450 on the downside, 21,850, and on a day-to-day basis, we make a challenge upward, but we're not able to hold out there. The good news today is at least the Nifty Bank is fighting back from the lows of the day, because that was the problem. Earlier this morning, we broke that 47,000 odd mark. But at least we're making a bit of an attempt to fight back on that. And that's going to be the big index, right? And tomorrow onwards, we'll sing to the tunes of the IT index, Reema.
In fact, tomorrow is going to be a big day. So one, you've got the US inflation print, the CPI print, and then the IT numbers, TCS and Infosys. All these actually come out post-market hours tomorrow. So Friday perhaps could be the day when the market reacts to all these big cues. But absolutely flat, a very range day. The mid-cap index too is down about 0.25%. The advanced decline ratio is in favor of the losing side. The sectors which are lagging today are PSUs and realty. And these were the two sectors which led the rally in 2023. So there is that bit of sectoral churn taking place. So the Nifty CPSC index is down 1.7% after a 76% rally in the last 1 year, while even the real estate index is seeing a bit of a correction. On the gaining side, it's the media industry, which is, come back in style in-house. So it's topping the charts with a 3.5% gain. Metals, private banks also giving it company. So even as the PSU banking index is down, the private sector financials at least have a little bit of a green tick. And a word on Asia. Well, Asian markets were largely lower today, barring Nikkei. Nikkei closed with a gain of 2%, and it's crossed the 34,000 mark for the first time since March of 1990. And this follows a solid year that Nikkei had last year when it gained 25%. And even today, it's continuing with its rally. The rest of the markets, as I said, were broadly on the weaker side. Shanghai, Taiwan Straits all ending down.
We just have to look at the intraday chart. We had the Nifty up for you. Pull up the Bank Nifty chart as well. It is all over the place. I mean, we haven't had such choppy action in a while. November, December, we got used to seeing these trending markets. That's not been the case today. If I talk about even PSUs, while larger PSUs are struggling today, there is some turnaround in the mid-cap PSU names. Look at Ircon. That would be a case in point. That stock's surging now. Some of these railway PSUs is up 5%. RVNL up 5% once again. So within PSUs, I mean, there's a lot of differentiation that's playing out, but the larger names, bigger boys like Coal India, etc., they are down and out. ONGC, NTPC, the big PSUs, nifty ones, they are mostly down and out even as we speak. Now, within the banks, again, the trends are very, very diverse. Because of the PSU sort of downward draft, SBI is not performing, HDFC Bank is. So within a sector as well, you have very divergent trends. Within IT, Infosys is approaching the numbers very, very cautiously. The others are doing much better. For instance, TCS, etc., have been up and about. Short point, there is no trend. We are in a ranging market, but the lows are getting defended, and that is something that the bulls perhaps, that's the best case scenario that they can work with till we have more clarity and, further headway with respect to the Q. So let's straight away get to the strategies then and, what you perhaps would want to do in the last hour. We have Mitesh back with us. Mitesh, we've been discussing this right through the day, right? That on the index, I mean, you're absolutely bound by the range on either sides. Do you see that changing, A? And B, what about individual trades, either on the index or stocks?
Good afternoon, Surbi. So I think, we've been calling for a range market, and now we are trading near to the lower end of the range. Now, whether it will change will depend if we see the index, go below 21,480 and give an hourly close below that. We haven't seen that. We did venture below that level today in the morning, but we haven't seen that. So it's a situation when, your short term, the hourly and the 2 hourly indicators are slightly on the negative side, while the weekly and the monthly and daily are still positive. So whether the break will happen or not, it may depend upon some kind of news flow. But I think even if we see this 21,480 being taken out, then I think the maximum level which I'm penciling on the downside is around 21,200. So it doesn't look like a full-fledged decline, but still looks like more of consolidation. It could be a stronger pullback in case we break below 21,480. So that's the way we are keeping our market view. On the stock side, ABB is something which can be bought with a stop at 48.75. Look for targets of around 5,100, 5,125 over here in the near term. And on the sell side, I would want to go with DV's Lab. I think, that's the stock which is breaking down. So that's a sell with a stop just above 39.25 for targets of around 3,800.
Okay. Mitesh, Indus Stars has made an up move today. There is that BOFA double upgrade. Target price has been pitched higher. Technically, is the chart supportive of an up move, a 25% gain from here on?
So, Indus Tower, I think, if you look at the last few weeks, the stock has had a good run from 180 odd levels to about 225. And now again seems to be, have turned sideways for the last 2-3 days. The overall pattern on the medium to long-term charts is very, very positive. But I think the next leg will start once we see the stock get past this 228, 230 zone. And then we can even look at targets in excess of 260 to about 280 over here. So for the time being, it remains an accumulate. In case you get it closer to 205 to about 204, that will be a very aggressive level, which I would suggest, people to go aggressively long over there and keep a stop below 196 there.
Okay, all right. Mitesh, thanks very much. We'll come back to you in a bit and get some more ideas in. For the time being, let's focus on some individual stocks that are in the news today and are seeing some interesting price action. Manappuram Finance is definitely one of these names. Now, the stock has been down right from the morning. We got to know that SEBI has kept the company's arm Ashirvad Microfinance's IPO in abeyance. Abhishek is here with more details. What are the issues here, Abhishek? I mean, any idea about whether this is just a temporary delay or something more to it than that?
Well, it's just a temporary delay because, Ashirvad may take 15-30 days to get back to SEBI with the query that they have made. So, Ashirvad IPO has been delayed. SEBI keeps Manappuram's, MFI arm, that is Ashirvad MFI IPO in abeyance. Now, sources tell CNBC-TV18 that there were certain queries raised by SEBI, 3 of them which have been raised so far. Amongst them, 2 of them have been clarified and details have been given. The third query requires legal opinion which is being taken. So along with legal opinion, they are also in consultation with their bankers, that is JM Financial. So it needs some response, some time to respond to SEBI over there. The third query, that's why it could take about 15 to 30 days in terms of, Manappuram or Ashirvad getting back to SEBI. The query is common in nature. It will not affect the IPO process or IPO stallation. It's just that it may get delayed due to the query on which they have to respond to SEBI. We did reach out to Manappuram Finance. However, they are yet to comment on our story. Back to you.
Thank you very much for that. Prakash, this isn't a big fundamentally altering development. So you're getting the stock 5% lower, Manappuram Finance. Therefore, is it a buying opportunity according to you?
So, Rima,
I mean, you would have to evaluate whether gold financing companies is what you want in your portfolio. I mean, there are people who don't have any exposure to this segment, and from that perspective, it definitely would be a good opportunity to start buying into Manappuram if you find Muthoot, let's say, a bit pricey or riskier in that sense. But my recommendation has always been to play the gold financing segment, the story there, through some of the banks that have become very aggressive, and some of the banks like CSB, even Federal Bank, you've seen incrementally improve their portfolios towards from this gold financing segment quite dramatically. So that's where I would look at. Manappuram would tend to get a bit more, make it more vulnerable in that sense. So the risk reward might not be that promising at this point in time.
Okay. All right. Hi, Prakash. Good afternoon. Prakash, I want to ask you about some of these railway-related stocks. IRCTC has moved up close to around 2%. You have IRCON. I think the street is anticipating some kind of a flow on that basis as well. So both those two are doing pretty well. What's your view on the railway theme? How much of it has already played out? And if you still want to get in, what would you buy?
Good afternoon, Nigel. I think the railway theme is definitely far more secular than what we think. We've just seen the good start to it for the last year and a half. But some of them which are into longer term projects. So it's like saying, the power sector has started doing well. BHEL has a lovely order book. Execution is likely to be very positive. The same thing is for railways, Nigel. I mean, you have the likes of RITES and IRCON sitting on orders which will take them through visibly in the next 3-4 years in a very, very well defined profit trajectory. And from that perspective, it's fine to pay slightly more, given the fact that nobody in the next couple of years is going to let go of stock. So, incrementally, it's going to get more and more difficult to accumulate these kind of names. And as their size grows, a lot of funds, a lot of institutions will have to make allocations proportionate to that. So from that perspective, I think it's still a good opportunity to get into IRCON or RITES. I also like some of the railway beneficiaries, which may not be companies that are owned by the government within the sector, but then you could also look at some of them which are into railway safety and all of that. But yeah, out of these two, out of the government-owned railway stocks, IRCON and RITES definitely stand a very good chance.
Okay. Prakash, stay on. I have to discuss just two more pockets with you today, which are in news. One is Delta, and then there is this whole excitement in the media space. Not sure what's causing it. There's a Z story on one side, but the media buying is today, quite something. Let's address Delta first. We have Mangalam joining in. Of course, we know the stock's been under pressure because numbers were not that great. We did speak with the management as well. Mangalam, take it away.
Well, the stock opened lower on account of, weaker than expected results in an otherwise seasonally strong quarter. But from there, it's seen a bit of a recovery. That after the management has explained to us, the various prospects of the business going forward. The first one, of course, was that the reason why the revenues were lower in the third quarter were largely because it was more December ended than anything else. 55% of the quarter three revenues came in from December because one, the GST regime rejig, got the company to rethink their strategy, and secondly, Diwali itself was delayed, so not a lot of space was left for October and November to show some business itself. They do believe that the fourth quarter will be similar to the third quarter, and that's largely because now the company has begun to give discounts and increase promotions to bring back customers. That's helping them. But at the same time, one of their ships will go into the dry dock, so that revenue will not be recognized. They've not made any provisions for the 24,000 crore sort of show cause notice that they've gotten because their lawyers believe that there is no need for the same. And secondly, the show cause notice hearing for all the GST amounts will be clubbed together and will be heard next month. So that's something we'll be watching out for. They've also diversified into real estate to make best use of the funds that they have and the promoters' acumen, and they may pivot into realty if they don't see further growth opportunities in the casino business in India itself. The other trigger that we are watching out for is Daman. There is a likely hearing over the next few months. So once that happens, that will be something that the street will be watching out for. And the final trigger would be value unlocking that will come by. They've put their online gaming IPO currently in abeyance until further regulatory clarity. And they will also sell their stake, the 28% stake that they have in Advani Hotels at the right time. So as a result of all these things, the stock saw a bit of a recovery from the lows itself.
October, November, December quarter generally is a very strong quarter for us. But as you remember, this is the first quarter where the new GST tax regime kicks in. we are hopeful that we will be able to turn around and probably get back to the same revenues that we were doing earlier. The Q4 revenues, we are pretty confident would be probably in the similar lines of the quarter that just finished.
Prakash, this is a company which has been saddled with a lot of regulatory issues. If someone is a shareholder in Delta, what would the advice be?
Rima, I think all of these elements that you hear about from the management in terms of reviving the business or restoring some confidence, they're very tepid. The argument is not at all solid because the entire business model is turning on its head. And let me tell you from the level, what I see at the ground level, the gaming business, the casino business has got such high competitive intensity. Some of the other players which are not and others, they have started offering far more better packages as compared to Delta, and that's where the market share also might not be something which they can hold on to for too long. So I would believe it's best to get out. I know people will end up booking losses to a large extent, but it's better to utilize that capital somewhere else and make it grow rather than wait for this business to keep reinventing itself against all the headwinds that are still likely to be there.
Okay,
Not
right.
for the faint-hearted, it seems.
I guess not, and because this is fundamental business change that we're talking about. Even if those, that demand of 23,000 crores gets settled one way or the other, the question is, are people willing to fork out 28% GST on the bets they're placing? So there are bigger questions, I think.
Yeah, I think you could argue on both sides. Prakash clearly is quite cautious on it, and with good reason, because the business itself has gone through fundamental change. Otherwise, you have cash in its books.
Yeah.
You have that asset in terms of the Advani hotels. At some point of time, you expect business to recover and people to come to terms with this new GST regime. And the management said that the GST demand is 6 times the worth of the company itself.
Yeah.
So they believe it's more unrealistic. So let's see what the courtroom say. You also have the Daman order. So it'll be interesting to see how this one plays out really. From around 150 rupees, post the big correction. It was a 300 rupees stock, I think, of 12 months or so ago. It's 150 now.
Well, speaking of stocks that are going through, big changes, I just want to quickly end with, media and Z and what's happening here. Come in on this, Prakash, because Z is a story in itself. But today, what's interesting is look at what's happening right now. ENIL, your music broadcast, of course, Network 18, TV18, TV Today, NDTV, all media stocks are on fire. You picking up anything here?
No. So I think it's a market's way of recognizing sectors that have got ignored. And which still have valuation comfort. And surprisingly, when you go through the numbers, some of these media companies actually have cash on their books. There's nothing which you would have which is worth complaining about. The business models are fairly evolved and mature. The only thing that probably escapes attention is the kind of growth that you would want. That doesn't probably come in. If I were to look at anything out of this whole entire media spectrum, it's a channel that people are watching right now and the group companies there. And those are the strongest bet at this point in time. Because not just because of Sony Z, what's going through there, but it's more because of the kind of consolidation and market share gains that the Disney tie-up will probably accrue going forward. So I think it's an interesting space. But there's not much to choose from a value perspective. So, it's good to kind of look at other things than this. It's just a catch-up rally which could probably last a couple of days, and then the market will find some other sector to move to.
Okay, got that. Prakash, stay on. Of course, usual disclaimer applies. Network 18, TV18 are the companies that run and operate the channel that you're watching, CNBC-TV18. I just want to point out one more stock, Cochin Shipyard. Just to put this on people's radar, the stock went through a split today. I think face value 10 to face value 5. But look at it go. I mean, split happened. There's a 20% up circuit now on Cochin Shipyard. I guess it tells you that the defense theme still has plenty takers. That's one stock that's on the move. We'll take a break on that note, come back on the other side. We'll also have Abhiram Elsurupu joining in. He's from BNP Paribas. We'll get their market perspective as well.
54th annual meeting of the World Economic Forum, with much-needed conversation on achieving security and cooperation in a fractured world, creating jobs and growth for a new era, harnessing the power of AI for social good, and drawing a roadmap for achieving climate goals. Davos 2024, the global epicenter of power, live and exclusive with us on CNBC-TV18, with a quarter century of excellence behind us.
Welcome back. Reliance Industries has made a big move now, 1.6% higher on Reliance Industries. And a bulk of that move has come through just in the last few minutes. There you have Reliance Industries. And it's pushed the Nifty up a tad bit. A couple of the other notable movers included Cipla, that's your top Nifty gainer, 3% higher. Adani Group stocks like Adani Enterprises, Green, Adani Ports, up. In the IT pack, it's HCL Tech, which is reporting, and it's expected to report the strongest growth at 4% this quarter, is up 1.8% and seeing some buying. And in the private sector financials, it's ICICI Bank and HDFC Bank. Another set of stocks that we're watching are the telecom names, and in that particularly Indus Towers is on our radar because today BofA has double upgraded the stock. Their rating now is buy. Their target price is 270, so it's a good 25% premium to where the stock currently is, and their key thesis is that the capex from here will come down, which means there is more room for a dividend. And if the Vodafone issue settles down, Indus Towers, Vodafone Idea owes Indus Towers some receivables. So if Vodafone Idea managed to raise that fundraise, that elusive fundraise, makes those payments to Indus Towers, then Indus Towers may give out a special dividend, and valuations too are reasonable, which is why they believe that risk reward is now turning favorable. Even on Bharti Airtel, they've turned neutral. It's an upgrade, but their rating now stands at neutral, and this is backed on meaningful tariff hikes in the next 12 months. Tariff hikes have not taken place, broad-based tariff hikes for the last 2 years now, but maybe post-elections, the street is hoping that the tariff hike will come through. So that's about, BofA reports on Indus Towers and even on Bharti Airtel. But now Nimesh is with us now with the standout brokerage report of the day. Nimesh.
Hi, Rimas. The standard report today was an IGL, and that stock is under pressure on the back of a double downgrade from UBS. So today UBS has downgraded IGL to sell from buy, and they've got the target price to 400 versus 630 earlier. Now, the key reason for the downgrade is one, they believe they expect lackluster volume growth in the near term, as well as the core business, getting impacted over the longer term. So that's the key reason why they've downgraded the stock today. Now, they believe that while the infrastructure expansion and policy support is yet to reflect in the CNG volumes for IGL, in terms of valuation, stock is trading at near long-term valuations, and they're not factoring in the key risk of headwinds from volumes as well as impact of rising EVs. So that's the risk for IGL going forward. While they expect the near-term pricing to be strong, but it's capped at upside, and hence on back of that, they've cut the volume estimates for FY24 to FY26 by 11 to 16%. So on back of higher valuations and the fact that the core business is at risk, a double downgrade on IGL to sell now with a target price of 400 rupees from UBS.
Okay, all right. Thanks a lot for that. Nimesh explains why that stock is under some pressure in today's trading session. Well, let's welcome Abhiram Eliswirupu, the head India Equity BNP Paribas India, who joins us on the show. Hi, Abhiram. Welcome to the show, and thanks so much for joining in. Well, how are you reading the markets? Most of the street is expecting some bit of a downtake or some bit of an underperformance in 2024. Do you think that's going to happen, or do you think these markets continue to, climb the wall of worry, continue to move ahead? And last year, towards the end of the road, you said maybe, they'll pull back a little bit. They didn't pull back. They actually zoomed. Your take on the Indian markets?
Hi, Nigel, and Happy New Year to everybody. For the full year, I think that we will have positive returns, maybe modest returns compared to the previous year. And I do think that most factors are favorable still for India, even on a relative basis compared to other emerging markets. But also the whole domestic story is still quite strong across sectors. So in that sense, I think that that most of the parameters that analysts look at are favorable. The one exception being valuations. Now, if you go bottom up and start trying to pick stocks, you'll see that many stocks are at +1, +2 standard deviation versus their history. And that's what is making investors probably a little uncomfortable. Now, that said, if you take the next couple of months, or maybe going into the first half of the year, we have two major catalysts, one of them being the budget, which could be interim, but the budget still, and the elections. And any guidelines or any direction in which it suggests that there's policy stabilization or continued policy stability may lead to further upticks on the market. So I think that we will have moderate returns for the full year, and maybe those returns would be front loaded. Now, what we are seeing today, Nigel, also is a typical January effect, which is that the market's priced in a soft landing scenario and inflation correcting globally very quickly. And we're starting to see some pullback of that, at least in global markets. So that's something I think would be short-term in nature. But I think what I just said earlier was probably going to be the full year picture.
Okay. Moderate returns, which will be front-loaded. Abhiram, I remember in one of our previous interviews, you said that you're focusing on 4 themes. One is affluent India. second one financials, the third IT, and fourth capex. Now, on that point about capex, which benefits utilities, defense, railways, etc., we were chatting with one of our guests on Trading Hour from Nuvama, and he said that the government spent about, there was a 30% increase in government capex last year. But it's unlikely to sustain at these levels. So therefore, the government capex spend will come down this year. And private sector capex is also, it appears difficult that it will pick up because the top line growth for many of the companies will not grow to that extent. And therefore, the high valuations appear to price in, and they appear a little on the excessive side if that growth rate doesn't continue. What are your thoughts on this argument made on the capex theme?
Yeah, I mean, I don't disagree with some of the points made, but then many of the points made also apply to the market as a whole in terms of valuations. What I would instead probably focus on is the sub-segments of that whole capex theme that may still be good. So if you split capex today into transport and non-transport side, I'd say that on transport, I mean, maybe on roads, not so much, but I think the railway theme will still probably continue. The growth visibility is still quite high. And on the non-transport side, I think power, transmission, those areas are still very strong. Now, what you would expect going into election year is that some of that will tail off. But if you see numbers that are coming out from companies or what they seem to be telling the street is that elevated level of order flow will continue. So therefore, I think that even within the whole capex theme, there are pockets which would be interesting, and those will include railways and power-related items, especially on the transmission side.
And in railways, what is it that you like? Do you like the signaling companies? Do you like the ones which make wagons? Do you like, the telecom-related arms like RailTel, for instance? In railway, where is it that maximum spend is coming through?
Well, I think we like the space as a whole. I mean, getting into the specifics out there may be a little tricky, but overall, I think that the theme for the full year will still remain quite valid. And all the areas that you mentioned are of interest to us, starting from signaling, infrastructure, all of those elements, I think, look interesting to us. A lot of stock calls that are made, however, are based, ultimately you have to take into account your entry price and therefore where valuations are. So within that, I think wherever you see, that valuation is not excessively frothy, and I dare say that's difficult to find today, but wherever you do that, I think that's where the areas to be. So it's going to be kind of more valuation oriented. But in terms of growth and visibility, I think across the board, you do have that.
Well, I just want to pause for a second to go back and look at Reliance. As Rima was pointing out, this move is massive on RIL right now. And it's a 2.5% surge. In fact, the market itself is turned for the better. The color is now a little more decisively green. That's a huge stock to be making a move like that. Big one there. Bank Nifty has also turned. We are seeing some more traction on names like HCL Tech, TCS on the IT side, LTI Mindtree. So overall, the going is just getting a lot better for the market than where we were just half an hour ago.
Just one point, we'll have the Nifty Bank weekly expiry that will play out. So that could be another factor at play. And that's why we're seeing a bit of a fight that's coming in from the Nifty Bank. Earlier today, it was down. But the Nifty Bank, the last 45 minutes will be quite crucial. You've seen a good bounce. You'd like it to get closer to around the 20 DMA because at 47,600 odd, that'll be a bit of a resistance zone going by the kind of call writing we saw yesterday.
Absolutely. I mean, for the time being, Nifty Bank has turned, and so have some of these other big stocks. And that is really helping the bulls' case. Abhiram, hi, good afternoon. So, what's the prognosis overall? I'm not talking even about the whole year. These days, I think a few days are long enough. 12 months is a long time out. But in general, given where we stand, I mean, do you have sort of a big trade or a big theme in mind for 2024? If yes, then what would that be? The big trade of 24?
When we met a month or so ago, I was thinking that the big theme of the year would be that large caps outperform mid and small caps this year. And that would be based on the fact that mid and small caps have just run up too much. Maybe some of them still holds. Having said that, what I did see that over the holiday period, even large caps have rallied quite a bit. And you see the Nifty as a whole trading close to 22 times forward earnings. It is not the easiest place and easiest time to actually pick stocks, to be fair to you. So I would say that going forward is going to be extremely, stock specific, and looking for pockets of value. And where I do see that today is partly on large banks, especially private sector banks. And why I say that is because I think the whole theme of deposits getting repriced, and hence margins being under pressure, may be behind pretty much, more or less. There's also still some support on yields as they start to factor in a higher kind of gearing towards retail and NBFCs and so on. So I feel that retail banks, privates, especially retail-oriented private large banks, may be one space to be. The other end is one of the things that we've discussed in the past is IT services. If you start to believe in the soft landing scenario that we've been talking about, and I think really the best story about India is still very capex oriented, and so I think these will be the three big areas to look out for. But having said that, I think expectations on return should be sensible and moderate, because I really don't see another 20% rally from here, at least in the large caps.
Okay, all right. On that realistic note, we thank you, Abhiram, for joining in and giving us your view. Looking forward to chatting up with you all of 2024. Let's focus, though, on one stock from the broader markets, which is Vedanta Limited. Vedanta is surging away in today's trading session, and we've got a note come out from Nuvama. They have gone ahead, they've upgraded the stock to a buy. The target price they've upped to around 362 from around 265 earlier. One of the factors that have played out is they've given Vedanta ex-Hindustan Zinc a higher multiple. Earlier, they were valuing it around 4.5 times EV upon EBITDA. Now they've upped that multiple to around 5.5 times EV upon EBITDA. For Hindustan Zinc, they continue to value it at around 6.5 times on a forward EBITDA basis. The key reason they're saying is the successful debt restructuring at its parent, that's Vedanta Resources, that removes a major overhang for the stock. They say that because though the restructuring comes at a higher cost, it gives them time and it gives them a 2-year breathing period. And because of this, the management can focus on the core business. So they say they can focus on unlocking incremental cash flows via two factors. One is the ongoing aluminium and zinc expansion. They can focus on that, and from there they can get additional cash flows. The other factor they can focus on is they have given their intent out that they look at divesting some of the steel as well as the iron ore businesses. And they're saying that, with this out of the way, that is the Vedanta Resources restructuring out of the way, now they can focus their energies on both these two factors. Core business as well as on divesting some of those non-core assets. As we speak, Vedanta Limited, that was down close to 2% earlier today, that spiked up, currently moving to the high point of the day. You don't rule out Anil Agarwal. He believes that he has a plan, and he had told us here on CNBC-TV18 earlier that by the end of this fiscal, he'll be able to get rid of that iron ore as well as the steel businesses. So let's see how that goes, because that's what will help them in terms of deleveraging. Both the balance sheet as well as the promoter entity can deleverage themselves at the top via some dividend payout as well. Stock currently surging and on very high volumes. So in a short break, you come back. Nimesh will join us to tell us what he's picking up in terms of dealing room action. We'll also get our technical expert with us to give us some buy and sell calls. Welcome back. Well, the market's not able to drive home that advantage, actually. We went up, but we've slipped a little bit. The Nifty Bank as well, from being up close to around 170 points. Now it's up close to around 80 points. So, yes, we have seen a good recovery, but we're unable to sustain at higher levels. Interesting final 20 minutes coming up. But let's go to Nimish. He's standing by for D-Street chatter. Nimish, what are you picking up? Is this bounce, a short covering bounce, or do you believe that flows have been stronger?
Well, Nigel, for today, the last 1 hour of up move, can be explained by the fact that there is a basket buying at a leading FI desk. It's a Nifty-specific basket buying, so maybe that's the reason why all the Nifty stocks have seen a bit of a surge in the last 1 hour of trade. But largely, throughout the day, it was a day of consolidation with a bit of a negative bias. And again, it's very stock-specific in today's trade. Even in terms of flows, the understanding is it's very, very stock-specific moves, both in the mid-caps as well as in the large-caps names. I guess the theme seems to be a bit of profit booking in the outperforming sectors and stocks. So the PSU as a basket has seen some bit of profit booking in today's trade. And even in the mid-cap, the stocks which have rallied pretty hard and have outperformed in the last many days and weeks, they have seen some bit of profit booking today. So while the last hour move can be explained because of basket buying, but in general, there is a bit of profit booking as well, especially in the PSUs as well as in the broader markets. One sector which deserves mention today is the media sector. The entire media space is buzzing. All the stocks are buzzing in trade today. So no specific reasons, but looks like it's more of a sector rotation into media stocks today.
I think people are just looking for ideas, and media has been a bit of a forgotten space in the market. So maybe it's that. Maybe it's some buzz of, rub-off buzz of the deal. But anyway, let's talk about individual stocks, Nimesh. What chatter are you picking up?
Well, in terms of individual stocks, the first stock on my list is Eurocop Forbes. It came into my list a few weeks back as well. Again, the stock has been trading in a very narrow range. There were a few upgrades as well. In fact, initiating reports from some large FI brokerages. But the biggest overhang seems to be a large block. One large block is pending from a strategic investor, and looks like that may happen very soon. So that's something to track in Eurocop Forbes. The second name is MSTC. Surprisingly, this is one of the PSU names which has come into the FI radar as well. So for the last 2 days, the sense is there is a bit of FI buying as well in MSTC. So expect high delivery volumes for second day running in that particular stock. The third name is Solar BMW. That stock is relatively under pressure today within the OEMs, largely on back of block offers from larger FIs. So it looks like some bit of profit booking is there from FIs in Solar BMW. And the last one is Electra Green Tech. We got the management recently, and they actually downgraded the guidance for this year. But the stock is buzzing off late, largely in anticipation of a large order win from a state government. Remember, for this particular company, the order win is not going to be important. It's the execution which will come next year. So, the street is excited about the order win, but watch out for the execution as well.
Well, indeed, Nimesh, because you've spoken to the management a few times. First, they were talking about 1,200 buses, then 1,000. Last count that we had was around 700 to around 800 units. But as Nimesh mentioned, FY25 is going to be the big year in terms of execution. They're talking about 2,500 buses. So let's see whether or not they deliver that. But before we move on, just want to pull up a few stocks. Intraday chart of JNA Axles. Stock is up close to 12%. So while we are fixated on the headline index, stocks are doing a thing of their own. You have JNA Axles that's moved to the high point of the day. The stock is flying away. Munjal Auto, we don't talk about the stock very often. That as well has spiked up a little bit. VIP Clothing as well has moved up out there. So some of these stocks, they're moving to the high point of the day as we speak. Tanla Platforms, pull up the intraday chart out there as well. That one as well has done a little bit of jig of its own. I think there was some news flow as well on the exchanges a couple of hours ago. Currently up close to 10%. Mitesh Thakkar is back with us. Mitesh, what do you make first of today's trading action? That first dip to 20 DMA got defended. If you took a long trade earlier in the day, what would you do? Would you book out, or would you carry that trade and also fill us in with a couple of trades?
Nigel, I think I will suggest people to carry the trade purely because still a ranging market. We kind of hit the lower end. We might hit towards the upper end of the range. The first pivot is 21,730, so that's the target, and then 21,820. Having said that, on the stock side, I have 2 BTST calls. Reliance is obviously on the list. Disclaimer, it's a recommendation to our clients, so there's vested interest. But a BTST trade can be taken with the stop below 2630 for a target of 2675. And then I have National Aluminum, which is after a few days of pullback is trying to reverse. That's a BTST with a stop at about 128.5 for a target of 134.5, 135.
Okay, all right, got that, Mitesh. Thank you very much for joining in today and giving us all of those trading calls and ideas. We will see you with the market action again tomorrow. Well, now let's get you some highlights from the vibrant Gujarat Global Summit that is underway. Yash Jain, our colleague, caught up with Pankaj Patel, chairman of Zydus Life, and started off by asking him about the company's investment plans in the state.
In Zydus Group, not only Zydus Life Science, but the group companies included, is planning to invest about 5,000 crore rupees in total. This would involve investment into biotechnology-related manufacturing facility, also into area which is related to consumer products, and also there are some investment happening in the healthcare sector and also into the health-related product sectors.
Okay. Sir, I want to understand a few things about the business as well. As far as the US market is concerned, that has seen a lot of pricing pressure in of course, the recent times. Your own outlook on the US market, and when do things start turning around for companies like yours as far as the global markets are concerned?
So I think the US pricing pressure has eased out, and today the pricing pressure are not the same as one was expecting before. And I think the market has stabilized. All the companies are now seeing stable growth happening in that market. Ultimately, it will be depending upon what new product you bring into the market and what product registration you do and technology you employ. It depends on that how much more one can get more. And I think that's what is going to happen. We as a company believe that we have a good pipeline and we should be able to continue our growth journey.
Okay. Since you spoke about price stability and of course, stable growth, certain growth, for your company, sir, as far as the year is concerned, globally and domestic, what kind of growth do you expect for yourself?
So we do not give generally guidance, so it will be unfair on my part to say anything about the guidance, but we will continue our growth journey. We expect year to be good. As expected by the market, or even be a little better than the market.
Indian markets 8 to 10%, is that expected to continue at least?
Yes. Okay. Indian market will continue growing. I think healthcare facilities are increasing. Healthcare awareness has gone up significantly. So we really see that there is going to be significant further growth opportunities.
Okay. One question. This year, of course, the US market, US as well as India, both the places have elections which they are looking at. Do you see any significant impact coming on the generics market because of that particular reason?
We actually take out the problem with the government's face in terms of cost of healthcare, and the generics are the only way they can get control. So irrespective of what government comes, they would always require to support us as a generic player. Correct. Because that's where they can bring their healthcare cost under control.
Okay. One last question. We have, of course, the vote on account, but budget around the corner. As far as the industry is concerned, the pharma industry, what are 2 to 3 primary expectations or the requirements as far as the industry is concerned from the government through the budget?
So I think what we do expect is further push on R&D. I think because the industry has to move into innovative phase now, and the right kind of environment, ecosystem, and infrastructure support from the government can definitely go a long way in building pharma industry to the 130 billion dream what we have. Thank you.
All right, that is Zydus Life. We actually got, of course, more voices from the summit as well. We do have to take a break, but here out this big one. Earlier in the day at the Vibrant Gujarat Summit, Mr. Mukesh Ambani, Chairman and Managing Director of Reliance Industries, addressed the gathering. He announced that Reliance Industries has invested 12 lakh crore rupees to build infrastructure across India. He also spoke about the company's investment plans in Gujarat. Take a look. We'll take that break and come right back.
Reliance has invested over $150 billion, that is 12 lakh crores, in creating world-class assets and capacities across India in the last 10 years. Of this, more than 1/3 has been invested in Gujarat alone. He will help Gujarat target to meet half of its energy need through renewable energy by the year 2030. For this, we have started building the Dhirubhai Ambani Green Energy Giga Complex, over 5,000 acres in Jamnagar. This will generate a large number of green jobs and enable production of green products and materials, and will make Gujarat a leading exporter of green products. And we are ready to commission this in the second half of 2024 itself.
Welcome back. You're with us on Closing Bell, and we are in the last 10 minutes of trade, and it's been pretty interesting in terms of the pullback. Getting some more news now. This is from the oil and gas space. In fact, we'll try and get our colleagues in a bit on this as well. I think Sapna is reporting this. Yes. Equity infusion for capex in HPCL, ONGC as well. So big ticket news. Also IOC, BPCL.
So the basic news is that they're going to be infusing money into ONGC. Government is going to be doing it. It could be via the preferential route. The money that comes into ONGC will in turn be used to fund the capex of some of those OMCs as well. So this was something that the street was waiting for in terms of clarity. But it appears that's the news piece that we have as of now. Sapna joins us to fill us in with more details that she's picking up. Sapna.
Hi. So the basic points you have already clarified. So as what we have learned is exactly what you said. So it's going to be a two-stage transaction. Basically, government infusing money into ONGC. ONGC will then decide how they want to go ahead and give the money to HPCL. Obviously, GOI can't do it because they are not direct shareholders into HPCL. Hence, it will have to be done through the parent, which is ONGC. That's one. Second, this could be via preferential allotment, although we had been told, both options, rights as well as PA, both are on the table. But I think it's the preferential allotment route that the government may most likely adopt. The third thing, now this is very important in terms of how much get how much. We ask for the cabinet nod because every time you do a big ticket expenditure, the cabinet approval has to be taken despite a budget announcement. So 30,000 crores was what the government allocated way back. We also given to understand that this is not going to be the full amount is not going to be utilized. It may be anywhere in the region of say 15 to 20,000 crores. It's an educated estimation at the moment. So depending on what the cabinet approves, we'll have to wait and watch and see how much exactly HPCL gets, how much exactly IOC gets, and how much exactly BPCL gets in terms of the government contribution to help them meet their obligations in terms of a rights issue or whatever that they have planned. So it may just be possible that the numbers given out by BPCL and IOC at the moment, what they have told the exchanges so far, those are broad estimates. Depending on how much the government infusion is going to work out, how much they are going to put in as their own stakeholding, according to that, it may just be possible that the companies will have to basically customize or rework some of those numbers. So we've also been given to understand is that what they have told the exchanges so far, IOC and BPCL, they are big, broad estimates. So that kind of correction may be required, may not be required. So we'll have to wait and watch and see when this comes up in cabinet. That's the time when the exact numbers will be known. But broadly, yes, GOI will put money into ONGC, and that's how it is flowing to HPCL as of now. And the full 30,000 crores is not going to be utilized. There's going to be a saving for the government budget as well.
Okay, thank you very much for that important story. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us on the show. Mayuresh, Reliance Industry, the giant is contributing in how? 3% up on that. And from its October lows, it's seen a near rally of 20%. Where does it go from here?
Afternoon, Rima. I think much higher over the next few years if you've got that holding time frame. 2-3 aspects. One, the retail side of businesses for Reliance, both Jio and Reliance Retail, now account for almost 50% of the overall consolidated EBIT. And the expectation largely is that as discretionary spending picks up in the next few quarters and years for India, the general trend with the kind of expansion that they have probably planned, specifically on the retail outlet and obviously with the offerings that Jio has as well, should see significant amount of contribution as well. The second element in terms of their core business, as far as the oil and gas, petrochemical, and the new energy businesses are concerned as well, the traditional businesses are expected to contribute reasonably well quarter on quarter going forward. Obviously, the optionalities of feedstock that Reliance probably has ensures that their GRMs are far better than the reported Singapore GRMs as well. And that gives an additional kicker for the existing upstream business. For the downstream business, the expectations of crude staying in a range will largely mean that petchem prices should start stabilizing henceforth. And as demand comes back strongly, both from the Chinese markets in the next few quarters, we're obviously going to see polyester prices and demand inch even higher. So on a consolidated basis, including the new business where capex is expected to get put in, on a calibrated, in a calibrated approach, I think the return ratio should show significant improvement. Both the EPS RS ratings are quite good as we see it at Markets with India, and therefore the stock should continue its northward journey and linear growth in the next few quarters and years. We remain optimistic.
Okay, so that's a thumbs up on this big boy. Mayuresh, what's the positioning you have right now on large cap IT, TCS, Infosys, the other peers, LTI, Wipro? How are the bets placed as of now?
I think you've got the best colleague, Rima, to probably do that. What we are probably seeing in terms of result expectations from Infosys, as an example, expectations in terms of a constant currency decline in this quarter. EBIT margin should probably remain in a range for this quarter. But I think the more important aspect is going to be the forward guidance. The street is of the belief for Infosys that there might be a cut from the higher end of the range of their constant currency FY24 sales growth, that they probably go to 1 to 2.5% at the lower end of that 2.5% to probably 2%. EBIT margin might be normalized between 20 and 21% as well. And therefore, the management commentary is going to be extremely essential.
No, Mayuresh, sorry, I'm coming in over there. You're absolutely right. Rima has prepped us up and how for the numbers and what to expect. What I was actually asking is your stance on the stock. I mean, are they a buy, avoid, underweight, overweight? What's your market positioning?
So large cap equal weight, we're very close to pivots as we see it at Markets with India. But I think mid cap IT is somewhere where we remain a little bit more selective at this juncture. A few of the companies that we probably like within the space is something like a First Source or Cyient. So largely neutral on large cap IT unless the results and the commentary probably suggest otherwise.
Okay, Mayuresh, out of time. Thank you very much for joining in. The day belonged to the last 1 hour when there was a massive reversal in sentiment. The markets rallied and now closing well above 21,630. From the day's low, it's been a recovery of 180 points. The Nifty at the day's low went down to levels of 21,450 near its 20-day moving average, found support, and in the last 1 hour led by support from Reliance Industries, which ends with a gain of 1%, and even an ICICI Bank or an HDFC Bank rallied smart, 80 point plus on the Nifty, Sensex up 300 points.
Absolutely. I don't think anyone can complain. I mean, the recovery has been so stunning. The Nifty is closing barely 10 points off the highest point of the day. So this is a very, very strong pullback. No denying that. Just a couple of movers and shakers because it was in the mid-cap market as well. Let's pull out some stocks. We've, of course, been discussing Ircon and RVNL, the big buying over there. Look at Lemon Tree. It had a pretty good session as well, 3.5% on the upside. The jewelers we've been discussing since morning, these small jewelers, Moti Sons, RBZ's jewelers. Good show over there. Mankind can be thrown in the mix. Delivery had a good session. Tanla Platforms, actually, pretty long list of winners on the mid-cap side.
Well, that's right. Ircon, that's the one that really catches your attention. Final hour of trade belonged to that one. Nalco, it moved higher in the final hour of trade. Alumina prices could get a bit of a leg up, so that's why that stock was up. Yes Bank was up close to around 5% in trade today. You had a few other notable movers. On the downside, actually, SJVN, there were some reports indicating maybe the company could get a rap on the knuckles. So in the final hour of trade, the stock from trading well in the green, it ended in the red with a cut of close to around 4%. One of the top volume losers for the final hour of trade as well. SJVN comes up for you on the screen. Well, on that note, though, we'll wrap up on this edition of Closing Bell, but you don't go anywhere. Markets Forward comes up next.